Gold and gold stocks have had a nice run to start 2017. The question is, are they on the cusp of a new stage 2 uptrend, or are they in store for more sideways consolidation? Currently, my view is that more sideways consolidation is more likely, but I'll touch on some things that could change my view depending on what I see in the charts. This first chart is looking at a weekly view of GLD, and you'll see the rally that we've had so far in 2017. Now, one thing that's been lacking so far is a substantial increase in volume, which is what you typically see in a new stage 2 bull market. And that's what we saw back in early 2016, and why I was very interested in trading gold stocks back then. And you can go back on my YouTube channel and on my website and see all the videos where we talked about gold stocks and how this was a great trading opportunity back in early 2016. But again, the situation right now is that we're coming into the 30-week moving average, but we've got a lot of resistance from the massive selling that occurred late fall last year, with big selling after the election, and then we also had a lot of selling back in early October. So gold needs to overcome that kind of wall of near-term resistance before it can actually reemerge into a stage 2 uptrend. And I view that as one factor that could limit the ability of gold to break out here before consolidating further. Now, looking at the chart of silver, we kind of see the same thing, where we saw a massive increase in volume last year on the breakout, but this year so far volume has been tepid. And again, you've got a lot of wall of selling immediately overhead in silver that occurred late fall last year. So when you see something like this, it really is more likely that the market would base for a while longer before really breaking out into a new stage 2 bull market. And one other thing to note is, look at the relative strength on silver compared to the S&P 500. You see silver still underperforming the stock market, and contrast that to what happened in early last year. Immediately when the breakout occurred, silver was, one of the best places to be in the market, as it was outperforming. That's what all this capital got attracted to the silver market. Now, another factor that's preventing me from getting too bullish currently on gold is the US dollar. And I've seen a lot of people talking about the imminent demise of the US dollar, but just looking at this chart, you can't say that the US dollar is not in stage 2 by looking at what we're seeing right here. The US dollar is still above the 30-week moving average, and the 30-week moving average is still increasing. So until we see a real breakdown on this chart, the rising US dollar, I think, will put overhead pressure on the gold market. And that's actually what we saw last year, how when gold topped out in the summer of last year, it was really a large factor for that was this basing action in the US dollar, which ultimately resulted in a breakout of the US dollar back into an uptrend. And you see the increase in volume too as the dollar broke out. Now, the dollar overall has been kind of in this choppy consolidation for 2 years. It's kind of consolidated the gains that occurred in this super spike rally from 2014. So it actually is kind of a bullish consolidation, and I would not be surprised to see the US dollar make more new highs after this retest of the 30-week moving average. Now, the gold stocks, like I said, have had a big run to start this year. They haven't actually had a down week since 2017 started. But again, look at the volume on GDX. You haven't seen the massive increase in volume that we saw early last year when the gold stocks broke out. which from a stage analysis perspective makes it less likely that this breakout is a real sustainable breakout into stage 2 before more consolidation might occur before the real breakout. Now looking at GDXJ, this ETF actually has had more volume than GDX and the GLD and SLV ETFs, but still really just had kind of a good increase in volume the last week of last year and then the first week of 2017. Then it's kind of tapered off since then. Again, this is a little bit different than, this actually on the breakout didn't have the increase in volume that GLD and GDX had, but still you can see immediately how it started really taking hold of leadership in the stock market, where now it's still kind of struggling to become a market leader given the fact that the US stock market is still in an uptrend. Now looking at individual gold stocks, I'm on the stage analysis screener on the gold market, and I've filtered down the stock list to only show stocks in stage 2, and then I've sorted by volume, and you can see that there's just a handful of gold mining stocks that have more than average weekly volume right now. Average weekly volume is at 1, so anything less than 1 is below average weekly volume. And really what you should see here is stocks with 2 times average volume or more when a market breaks out into stage 2. So again, this shows that there's just not a lot of big time buying pressure coming into the gold mining stocks that would signal a real new bull market. Now contrast that to what we've seen this year so far in uranium, where the volume in this sector has been really overpowering for multiple weeks now, and uranium cleared out of its overhead resistance immediately once it broke out of this basing formation. So from a stage analysis perspective, the uranium market really is a much better stage 2 breakout than what the gold stocks are currently. Notice how the uranium stocks are outperforming the rest of the market. So going back to GLD, if things change quickly and we see a big increase in volume in this ETF, along with big time buying pressure coming into the gold stocks, I would quickly change my opinion and think that the gold stocks were immediately back into a new bull market. But without those things happening, I would think that more sideways consolidation would be a more likely scenario for the gold market before a new stage 2 starts. Now overall, the basing pattern in the gold market I still feel is exceptionally bullish. I think the gold market, the bear market, is still over with, but if the US dollar keeps rising, it'll still put pressure overall on the gold market, so which could cause the sideways action before the US dollar ultimately puts in its top. The US dollar has been in an 8-year bull market, so it is overdue for some kind of cyclical bear market, but it doesn't mean that the bull market and the dollar can't continue for a little while longer.